You're watching BCTV. We're all about Branford. You're watching BCTV, Branford Government Television, a service of Branford Community Television. This program is brought to you in part through the support of the town of Branford.
Okay, we're going to get started for the Board of Finance special meeting for the town of Branford, February 26, 2024. And before we get started, I'd just like to inform the board that Charlie Shelton is on the phone with us. Right, Charlie? I'm here, sir. Okay, just gotta hold off on the background music. Okay, so we'll start with this is a special meeting, so we're going to start off with to hear a presentation from GYL Financial Synergies with regards to the performance of the Town of Branford Police Pension Plan for the quarter ended December 31st, 2023, and if necessary, rebalance the portfolio. And then we'll move on to item number 2, 3, and 4, which covers the volunteer fire, the other post-employment benefit fund, and the coastal resiliency fund. Welcome, Michael.
Great. Thank you, Mr. Chairman, and good evening, everyone. As we typically do, although since this is only, I think, the second or third of the market overviews that you've heard from me, despite having seen it for the past number of years. But what we typically do is put together an acronym to address the salient points each quarter. Our acronym for this quarter is RECIPE. Starting with the R for rates. Probably, everyone's a little bit tired of hearing about interest rates. I'm sure they've been the big topic of conversation for the past 18, 24 months or so. But it's kind of interesting that in 2023, despite a tremendous amount of volatility in interest rates and a lot of folks trying to read the tea leaves, so to speak, to understand which way the Fed is going to go, the Fed basically acted exactly as they telegraphed, but it created a tremendous amount of market volatility. But interestingly enough, we finished the year basically right where we started. We started at, I believe, 3.8% on the 10-year Treasury, finished the year at 3.88% on the 10-year Treasury, despite having gotten up above 5% briefly at one point. The Fed will, in all likelihood, start cutting rates at some point this year, although as they've been making perfectly clear, and some of the economic and inflation data is supporting, probably not as aggressively as some market pundits would hope. We don't view that as necessarily a bad thing because it's an indicator that the economy is still reasonably strong, and the economy is the E in our acronym. We continue to have strong GDP numbers. The rate was 3.3% during the fourth quarter, following the 4.9% GDP growth during the third quarter, and that increase was primarily due to exports as well as strong consumer spending. The consumer is the C in our acronym. Consumer confidence is trending upwards after having been pretty mediocre for quite some time. It's kind of interesting because consumers as a whole feel that, or on an individual basis, feel that they're in pretty good shape. At least that's what the surveys indicate, although they feel everyone around them is suffering. But everyone seems to sort of have that same view. And so in light of that, that's part of the reason why the consumer continues to be as strong as they are. About 2/3 of our economy is driven by consumer spending, so very much as goes the consumer, so goes the broader economy. And the consumer right now, primarily because inflation has started to come in and employment is still very strong, consumer confidence has been on an uptick. The I in the acronym is for inflation. Inflation certainly has rolled over, and we're down to, I believe, we're at about 3.4% for the headline number. That's somewhat lower than the Fed would like to see longer term. They have that long-term target of 2%. However, I think it's worth noting that if you kind of step away from the headline number, the inflation numbers at the end of the year, if you look at goods inflation versus service inflation versus shelter inflation, goods inflation was basically back to flat, which near as makes no difference to zero. Services inflation was still somewhat elevated, but in the low threes, and it was actually shelter inflation, which accounts for about 25% of the number, was the biggest driver. Now, there's a lot of, I'll say, flaws or nuances with the way shelter inflation is calculated. It's something called owner equivalent rent, and so the way to think of it is kind of imagine if each individual renter and homeowner were to make a calculus every month and sort of decide, is it economically favorable or not for me to move? And we know that that's not how people think. We also know that there's a huge difference between someone who maybe bought a home a year or so ago at a 7.5% interest rate versus someone who owns a home on the shore in Branford that they bought in 1968 and have long since paid for, and it's multiplied in value many, many times over. Yet from an inflationary standpoint, they're kind of viewed as being substantially similar. So shelter inflation tends to lag behind, and that's part of the reason why economists continue to be somewhat optimistic that really inflation continues to ebb. The P in our acronym is for productivity. Productivity has been on the upswing. That's significant because one of the types of inflation that has ebbed is wage inflation, and so that's basically freed up capital for businesses to invest in other things, capital improvements and the like, and then add to that the potential productivity gains from artificial intelligence. Still kind of early days, but certainly it's believed, and I think it's a reasonable belief that there will be tremendous productivity gains to be derived from artificial intelligence in the coming years and decades. And then lastly, we'll finish up our acronym with the E for elections. I'll spare you all comments on the elections since all of us are probably already at a kind of capacity there, except to say that we're in the heart of silly season. Things are going to change day to day, moment to moment. And kind of the two words of wisdom we have on that is, remember, 9 months is an eternity in politics, so resist the temptation to call the election after each proverbial basket is scored, so to speak. And I think Warren Buffett, in a lot of ways, amongst the many memorable quotes he's had over the years, one of them is, if you mix your politics with your investment decisions, you're making a big mistake. And I think that's really important to remember. We manage this pension plan based on long-term strategic asset allocation targets designed to offset your assumed rate of return, your actuarial burden, as well as ultimately for the benefit of your pensioners to make sure money's available to make benefit payments to them. Okay. So with that as a backdrop, you all have the book in front of you. If you'd like to turn, please, to tab 2. This is the Police and Fire Pension Report. And tab 2, page 5, is the starting page. We'll take a view from 35,000 feet, starting on the top right. If we look at the about 4 rows from the top, the annualized return. The middle column there is the police pension. The annualized return has been 5.58%. Just a tick behind the benchmark, which has returned 5.65%. However, that's come with about 7% less volatility measured by the portfolio beta. You see a couple rows beneath there. And so that coalesces around the portfolio alpha, which has been positive, risk-adjusted return, a few rows beneath that. It's worth noting that although we've gotten the majority of the return of the benchmark, we've done so with about 7% less risk, and that is signified by both the beta as well as that standard deviation figure. In dollars and cents, what that means is at the bottom right of page 5, back in 4/1/03, there was $8.3 million in the police pension. Since that time, net outflows of $313,000, in other words, benefits paid in excess of contributions received, and just under $21.5 million in earnings, bringing us to the $29,491,000 at the end of the year. If we turn back a couple of pages to page 2, we can see the performance in the dark blue line across the top. It was a strong quarter as well as a strong year for the markets. Despite a rough third quarter, we had a nice snapback rally during the fourth quarter, and return for the quarter was 8.63%. For all of 2023, the return was 13.3%. And you can see 3 1/4, 683, 466, and 558 going back to inception. Positive return for both equities and fixed income during 2023, a nice rebound from 2022, which was really the worst year in memory for both the 60/40, the kind of the traditional 60/40 portfolio, as well as for fixed income in general. It's so nice to see a recovery coming in 2023. One of the sheets that I handed out at the beginning of the meeting is the rebalancing for the police pension plan. Since the end of the quarter, we've had withdrawals of about $450,000 and market decline of about $184,000, although the equities have appreciated, the bonds have come down in value a little bit, as interest rates have come up a little bit since the end of the year. But we are reasonably close to our target, where our target is at 52%. Fixed income, we're at 51.5%. However, if you look down to the bottom gray shaded line where you see the cash account total, you'll see we're underweight in cash at 0.9% versus 3% for the policy. So today we do recommend rebalancing, not so much because of the market performance, but because we need to raise cash to make benefit payments until the next contribution comes in July. So that would be the item that we would respectfully put forth for a motion for the police pension.
Okay, thanks, Michael. Questions on the police pension plan here? Or the rebalance that Michael is recommending? Somebody want to move it?
I'll move it. Second.
Moved and second by Harry. Discussion. Charlie, got any questions? All in favor?
Aye.
Okay. Thank
And
you.
just one last brief update on the police pension. At the last meeting, you all approved an extension of the duration and a reduction in the equity allocation, and that has been put forth. That will show up on the first quarter statement. But just to give you a little backdrop, on November 30th, the duration of the bond portfolio was at 6.14 years. As of December 30th, it had gone up to 9.07, and as of 1/31, it's actually up to 9.23. So that those trades and that lengthening of the duration has occurred since the November meeting when we discussed all that.
Thanks, Mike.
Sure. Okay, unless there are any questions on the police, we can move forward to tab 3, which is the OPEB trust. And tab 3, page 6. Again, the same review from a 35,000-foot view. The annualized return for the OPEB has been 518, a bit behind the benchmark at 534. That has come with approximately 14% less volatility. That's the beta statistic, pretty much in the center of the page. And so the risk-adjusted return, or value added, if you will, is signified by the positive alpha, which we see at 0.04. In dollars and cents, the OPEB had $4 million on 7/1 of 2011. Since that time, positive cash flows of $25,259,000 and investment earnings of $10.67 million, bringing us to $39,957,000 as of the end of the year. Moving back briefly to page 2, substantially similar, slightly better, but substantially similar performance to the pension, although a slightly more aggressive asset allocation. Return at 6.55 for the quarter. For the trailing 1 year, we returned 11.2%, and then 3.36 for 3 years, 6.37 for 5, 4.55% over 10 years, and 5.18% going back to inception. Looking at the rebalancing spreadsheet that you have in front of you, again for the OPEB trust, you'll see because we made changes towards the end of the year, you're basically spot on with the target. The relative strength of the equity markets in the first 2 months of 2024 has led to a little bit of of excess in the equity fund, but just 1.2%. You can see at the bottom in the gray shaded area, we're 33.2% equities versus 32% equities for the policy. However, we're in good shape as far as cash is concerned. No reason to raise cash and no recommendation to rebalance the OPEB tonight.
Okay, questions on this presentation for the OPEB?
Okay, thank you. So moving on to tab 4, we'll look at the volunteer fire. Again, covering the same material starting on page 5 of tab 4. We'll see in the center column, 4 rows from the top, the return, the annualized return of the fire pension has been 5.47% versus 5.8% for the benchmark. Similarly to the police pension and the OPEB, that's come with a lesser volatility than the benchmark, about 7% less volatility than the benchmark. The alpha in this is essentially 0. That comes really from 2 reasons. One, because the fire pension is 100% passive. We don't have that active strategy in the fixed income owing to the relative size of it, so there really isn't opportunity for excess performance. And then just the relative weighting of cash in what's been predominantly a rising market since the fire pension was split away from the broader pension. So our overall experience has been really spot on with what we would expect from the benchmark and the volatility. In dollars and cents, you can see at the bottom right, don't put too much stock in the beginning market value because of course this was transitioned over from the combined pension, but total inflows of $1.112 million. Plus the roughly $56,000 as beginning market value, and then earnings on the portfolio of $501,000, bringing us to $1,670,000 at the end of the year. I won't, in the interest of time, I won't dig into the performance as it's substantially similar asset allocation and investments to the police pension, and then we can go right to the rebalancing spreadsheet. And again, we are close to our target, where you can see we're underweight in fixed income, overweight in cash, and really spot on target in equities. That overweight to cash, of course, is to cover benefit payments until the next annual contribution is made. So we want to stay overweight in cash, and with that, there's no recommendation to rebalance the fire pension this evening.
Okay. So this far right column is just information.
It's informational.
Just memo type of thing.
The reason I bring all of these, even if we're not recommending a rebalance, is really just to give you a snapshot of the value. Since it's almost 2 months since the end of the quarter and the period that's covered in the report.
Gotcha. Questions on this?
Oh, good, Joe.
All set.
Okay. Okay. So lastly, tab 5. We'll take a look at the CRF. And again, on page 4, the high-level view, of course, this was funded in October of 21, so relatively short history. You can see the annualized return at just 42 basis points, primarily because of the volatility in the fixed income market and the heavy weighting to fixed income in this portfolio. However, it has outperformed its benchmark, which actually had a slightly negative return during the same time period at minus 30 basis points. That's come with about 12% less volatility, and so that also yields a positive alpha or risk-adjusted return. In terms of dollars, beginning market value of the CRF on 10/1/21 was $1,925,000. There's been about $527,000 in net inflows and $50,000 in earnings, bringing us to just over $2.5 million at the end of 2023.
Okay. And no rebalance.
And no rebalancing for the CRF.
Questions on this? Coastal resiliency? We're good.
If I may, Mr. Chairman, one thing I forgot to mention, just to give you an update on the duration of the OPEB, as you had at the last meeting. allocate all the dollars to immunize the liabilities. We're at a duration of 3.73 at the end of November, up to 761 at the end of December, and as of the end of January, it was at 7.92. So again, all those short-term treasuries have been invested consistent with the work that we have done with the finance director and the actuary as the Board of Finance approved in November.
Okay, thank you.
Great. Thank you all.
All right. Okay, item number 5. Charlie, can you hear me? Oh, there he is. Thanks. Charlie, you ready for item number 5?
Thank you.
Okay, here we go. Item number 5 is to consider and if appropriate approve the following transfer from the assessor for fiscal 2024. Welcome, Paula. How are you?
I'm good, how are you?
Good, thanks. So we're asking for a transfer from regular wages and salaries to $25,300 and moving it to seasonal and part-time help for the same amount. And you provided a nice overview for us in quite a lot of detail, which is appreciated, I thought. Yeah. So you want to give us an overview?
Well, briefly, it's been I started here in October because the long time assessors were passed. So there was a time frame where there was no assessor. And so in that time frame to try to keep up, we hired a seasonal person who has been very helpful. And, we were behind on everything. We're now catching up, and we're in the process of doing the revaluation. But we've just found out another employee will be going out on a 6-week at least medical timeout. So in order to keep us moving forward, we still have a vacant position that we haven't filled. It would just be helpful for us to continue to have seasonal person.
Sure. Questions from Paula?
I'll move it.
Motion's been made, and Pam is seconding it. Any questions? If not, good luck, you're all set. You all set, Charlie? All in favor?
Aye.
Aye. All right. Okay, item number 6 is to consider and if appropriate, approve the following transfer requests and resolutions from the Director of Human Resources for fiscal 2024 pursuant to the RTM approved collective bargaining agreements for Town Hall and these are Town Hall employees, union contract, the local 405. And this covers finance, assessor, tax collector, town clerk, P&Z, and then wetlands, police, fire, public works, solid waste, engineering, assessor, and pretty much it. And the total amount of the request is $109,566. And I have to note that Harry asked me not to read all of the line items, so that's why I'm going over that high cut. And our proposed resolution will be resolved that the Board of Finance recommends to the RTM a transfer from contingency of $109,000 as noted to the noted accounts and fund compensation changes pursuant to the recently approved Town Hall collective bargaining agreement through June 30, 2026. And Jim, what's our contingency balance?
With the items that are on tonight's agenda, and you have 3 of them coming out of contingency, the balance after all those would be $1,408,845.
Thanks. Okay, Margaret, you want to give us a little heads up on this one?
Sure, happy to. The first one is the Town Hall union contract, which has about 24 administrative staff positions. Most of those positions are not exempt. As you know, we've gone through negotiations with that union successfully and in good faith. This contract has been submitted to the RTM and approved, and we are not a part of transfers. The things you're most interested probably in, the salary changes and OT changes noted on the sheet in front of you are about 2.5%, but go back to July 1st of 2022, since it's a retroactive adjustment.
Okay.
And that is for number 6.
Okay, so, any questions on this? It's 100. Yeah.
Effective 7/1/23.
22.
22, because it has a retroactive component to it. Okay, other questions on this 109,000?
I'll move the resolution, Joe.
Been moved by Jeff,
Second.
seconded by Harry. Discussion? All in favor?
Aye.
Okay, there's a corresponding sewer utility fund transfer resolution, which would be operating transfer in of $4,416 into the appropriation for wages and salaries and retro wages of $4,416. And the proposed resolution would state that the Board of Finance recommends to the RTM a transfer of $4,416 to the sewer utility fund to fund salary changes pursuant to the collective bargaining agreement for Town Hall Union. The transfer will increase the fiscal year budget 2024 in the sewer utility fund from $4,813,105 to $4,817,521. Somebody want to move
I
that?
approve the resolution, Joe.
Second.
Moved by Jeff, second by Pam. Discussion? All in favor, Charlie?
Aye.
Aye.
Okay. Number 7 is to consider and if appropriate approve the following transfer request and resolution from the Director of Human Resources for fiscal 2024 pursuant to the RTM approved collective bargaining agreement for the Town of Branford employees, UPS EU union contract as follows. And this covers planning and zoning, IT, HR, police, building, engineering, senior center, Willoughby Wallace, and sewer utility fund, and human services fund, and animal control fund. Margaret, you want to give us the high cut on this? And this is a request for $104,695.
Certainly. This is for the Branford Employees Union contract, which has 23 positions in it. These positions are primarily exempt, professional, individual contributor positions. This contract also goes back to July 1st, 2022, was went through the same processes through RTM committees and approved by the RTM. It is now at the point of transfers. These are actual monies that are being transferred.
And again, this is a relative to the 2.5% or?
Correct, 2.5%.
2.5%. So Charlie, this is around 2.5%, and it's, again, retroactive back to 2022. So the resolution would be resolved that the Board of Finance recommends to the RTM a transfer from contingency of $104,695 to the noted accounts to fund compensation changes pursuant to the recently approved Town of Branford employees collective bargaining agreement for fiscal, for prior fiscal years and through June of 2026? Really? Why is that there?
Is that a 4-year contract?
Well, the contract.
It's a 4-year
is
contract,
26,
Joe.
Right, Margaret?
Yes.
Okay.
Both contracts go through.
These go through 2026. So we're not funding it, we're.
No, you described, I
Right.
believe the resolution was written to describe the contract through 26, but you're actually just doing the 24 and the retro for 23.
Gotcha. Okay. Somebody want to move that?
I'll move it, Joe.
Thanks, Jeff.
Second.
Second by Harry. Discussion? All in favor?
Aye.
Aye.
And the corresponding animal control fund transfer and resolution is to transfer in the Animal Control Fund of $13,503, and the authorization to spend the money for regular wages of $13,000, regular wages, overtime, and retro wages for a total of $13,503.
I'll move it, Joe.
And that resolution would be resolved that the Board of Finance recommends to the RTM a transfer out of $13,503 to the Animal Control Fund to fund salary changes pursuant to the collective bargaining agreement for the town of Branford Employees Union. This transfer will increase fiscal year 2024 budget in the Animal Control Fund from $464,421 to $477,924.
I'll second it.
Motion's been made by Jeff and seconded by Victor. Discussion? All in favor?
Aye.
Thanks, Charlie. And the corresponding, we have a couple corresponding resolutions as well. This one is for the Sewer Utility Fund, transfer in of $6,859, and expenditures for salaries, overtime, wages, and accrued payroll of $6,859, with the resolution being resolved that the Board of Finance recommends to the RTM a transfer out of $6,859 to the Sewer Utility Fund to fund salary changes pursuant to the collective bargaining agreement for the Town of Branford Employees Union. The transfer will increase the fiscal year 2024 budget to in the Sewer Utility Fund from $4,817,521 to $4,824,380.
I'll move it, Joe.
Been moved,
Second.
seconded by Pam. Discussion? All in favor?
Aye.
Okay. I think we've got one more, but I don't really have a resolution unless I'm missing it.
It's like at the top of the page, top of the last page.
Okay. This is, yeah, for some reason it's missing here, but, oh, here it is. No, I don't have it. I don't have it here. Okay. The corresponding Human Services Fund transfer and resolution for $15,697, transfer in, and then allocation and appropriation for salaries and wages of $15,697. And the resolution to consider is resolved that the Board of Finance recommends to the RTM transfer out $15,697 to the Human Services Fund to fund salary changes pursuant to the collective bargaining agreement for the Town of Branford Employees Union. This transfer will increase the fiscal year 2024 budget in the Human Services Fund from $1,939,499 to $1,955,196.
I'll move that.
Been moved by Victor,
Second it.
seconded by Jeff. Is there discussion? All in favor?
Aye.
Aye.
Okay. Thanks for those updates, Margaret. And then we'll move on to item number 8, which is to consider and if appropriate, approve the following transfer request from the Director of Human Resources for fiscal 2024 from professional development, 400, to travel, 400.
Thank you. This is my HR department's budget. We're asking for a request to move one line item to another. It's primarily due to the fact that I've been sending my staff to local, low-cost professional development programs this year, increasing travel and decreasing the professional services overall budget.
Okay, questions on this transfer?
I'll move it, Joe.
Been moved, seconded by Harry. Is there discussion? All in favor?
Aye.
All right, you're all set. Thank you. Charlie, you're all set?
Yeah, thank you.
Okay, item number 9 is to consider and if appropriate approve the following transfer request from the Registrar of Voters for fiscal '24 from contingency $71,700 into various accounts, which I will read. Part-time clerical support, $5,000. Election workers, $52,600. Deputy registrars, $5,000. Overtime, $1,100. Seasonal part-time help, 2,000. Moving and storage, 1,000. Purchase services, 1,600. Postage, 1,100. Meal supplies, 2,000. And travel, 300, for a total of 71,700. Welcome.
Thank you. I'm Jeff Ron, Democrat, registered voters. My counterpart, Darren Lawler, is still at a medical. And so his deputy, Peter Black, had actually been working on this, so I will chime in where I can, but generally we'll probably be answering most of your questions. So.
Thank you, Jeffrey.
Yeah. As you may or may not be aware, the charter calls for departments not to spend money before it's appropriated, so this is trying to be, for the most part, forward-looking. When we pass our budget in, we started, May, the Registrar of Voters is not budgeted for recounts, for primaries, because those are contingent events. We had 2 or 3 big things that bumped us up this year. One is, one of the smaller ones was a party primary in the 5th District. There was also a recount in the local election. There were a lot of RTM races that were extremely close. And most of all, this April, we have a presidential preference primary, which will require opening all polling stations. In addition to that, this year, for the first year, we have early voting, 4 days of early voting. That will be at a single site and probably cost about $4,000. But we, operating just the election workers, the poll workers who are paid on a daily basis, is about $50,000. The other things there's an explanation for them. One thing, I just noticed an inconsistency. I think what happened was Dawn wanted to bump up our postage to 2,000 from 1,100. It's not critical either way, but that would bring the total contingency draw to 72,600.
So your request is for
I'll say-
2,000 versus the 1,100?
Yes.
Okay.
I think in the editing process as it went through, I know Don took a second look at my first draft and said up a couple of numbers. Postage is up, and one of our big mailings, which is a bulk mailing for what we call the canvas, where we send letters out to thousands of voters saying, do you still live here? We've yet to do, and we're going to do that after the primary. So that's a big expense coming up.
So too, it's not just the mailing out, it's just we put return envelopes, so it's also whatever mail we get back
You have to
is
pay
returned,
for it.
and also to say the person doesn't live there anymore, we get charged for that also. So
Sure.
it's not just the out, it's the in also.
Sure. Okay, questions on this request? And actually, the request is now 72,600, with the postage being, amount being $2,000.
I have a question.
Victor?
What is a presidential preference primary?
You get to choose, Biden or all the other strong candidates against him if you're a Democrat, or, Trump or Haley, I think, is still maybe there. I'm not sure. But we have to hold it. The legislature moved it up to the day after Easter Monday in order for us to have an impact, because the race wouldn't be decided yet, maybe. But
Okay.
we have to open up all these polls, and like I say,
Wow.
that's, close to 50,000 just for the poll workers, the woman that checks you off, the moderators, et cetera, at our 7 polling stations, plus, extra time from some of the permanent staff, so you're talking at least, say, $50,000 pushed on to this town in order to have a preference primary, so that, you guys on your side can decide between your leading candidate, Joe Biden, and all the other strong candidates against him.
Right. Okay.
Thanks for all those
Thank you,
political
Peter.
comments there, Peter.
Sorry.
That's okay.
I think we all, I hope I'm not saying
You're
anything
fine,
that
you're
isn't
fine.
obvious.
You're fine.
Plus, it also includes is that early voting, which we all voted for about a year or two ago. The first time around is going to be basically March. There's going to be 2 more times of that happening, so that also adds to it.
Yes.
Yeah.
Okay, any other questions?
Good.
Somebody want to move it?
I'll move it.
Been moved
Second
by
it.
Victor, second by Jeff. Discussion, all in favor?
Aye.
Thank you.
Thanks, gentlemen. Thanks, I know it's a lot of work, appreciate it. Next, item number 10 is to consider and if appropriate, approve a proposed debt policy. And number 11 is to consider and if appropriate, approve a fund balance policy. Charlie, are you with us? Charlie, can you hear us?
I'm with you, Joe.
Okay. So, we did have an initial view of this at the last meeting, and I apologize that I would have actually had a little more conversation on some of the items in these policies with both board members as well as the administration. So my suggestion is to table this for another month or so. With regards to fund balance, I just think that there may just be some wordsmithing, and I think we need a little more information with regards to some of the targets that might be included in the policy. And similarly on the debts policy, just to make sure that everybody is on board on the Board of Finance, that we've read and understand if there's any implications that might be in any of these policies as we move forward as a board. So those are my comments. I don't know if anybody else has had a chance on the board to take a look at these policies since the last meeting. Charlie, you have any comments?
Yeah, I would like a little more time to look at both, primarily the fund balance policy, and I would go along with delaying action on this item at this meeting.
Thanks, Charlie. So Charlie's in agreement with me to defer any action on this tonight. Victor or Jeff, any comments?
I had an opportunity to review them, Joe, but I'm okay with reviewing them and making sure it's understood.
Okay.
A
Dan?
little more time.
Eric? Okay. All right, so somebody want to make a motion to table both of these items?
I'll make it.
Second?
Made by Jeff, seconded by Pam. All in favor?
Aye.
All right, thank you, folks, on that. And with no other business to become before the board, I'll entertain a motion to adjourn.
So
So
moved.
moved.
Second?
All in favor?
Aye.
Aye.
Thank you.
Thank you, John.
Yep.
You're watching BCTV. We're all about Branford. You're watching BCTV, Branford Government Television, a service of Branford Community Television. This program is brought to you in part through the support of the town of Branford.